Since June of 2020, the industrial real estate market of manufacturing and logistics buildings has been on turbocharge. Anything for sale, regardless of how ludicrous the asking price might appear, is met with multiple offers, bidding wars and one group of winners, sellers. As buyers go, we've witnessed an owner-occupant's ability to compete with investors wane and a flip in the occupant premium once experienced. If you don't recall the meaning of occupant premium, here is a brief refresher. Occupants, or companies that own the locations from which they operate, once could pay about 20% more than investors, those reliant on rental income produced by the location. Utility, financeability and rent savings were the main three reasons occupants would pay more. The downside of the higher prices paid, however, was the uncertainty of financing contingencies. If the occupant couldn't get a loan, the deal could crater. But, now that rents have increased exponentially, investor capital is abundant if not downright voracious, and most investors buy without needing bank involvement. So, the tables have turned. Our paradigm has shifted. Nowadays, investors typically pay a lot more than occupants. Rarely would an investor buy a vacant building and rely on their ability to rent it in a timely manner. Not that long ago, a steep discount would be negotiated for buying an empty site. After all, such things as downtime, free rent, improvements to the real estate and brokerage fees had to be estimated and deducted. A long-term lease generally found favor with investors. If this lease had to be originated, an investor would pay less. Today, shorter-term leases or empty buildings are preferred, because the market rate can be captured. If an under-market agreement is in place, it could take years to ramp up the rate to prevailing levels. In fact, the product is in such short supply and capital is searching for a home, we've encountered a new deal structure called the forward. Simply, investors are lapping up planned projects before they even break ground.